The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, folks, this is Larry Pesavento for TFNN. For our show today, the first chart I posted into Tiger TV today, folks, is just totally unbelievable to me, and that is the fact that we've got the VIX index making a double top that we made back on August the 4th. It made a top at 1757, and then today it's made a top at 1755 and has sold off 8%. Well, the market is going straight down. The number of times I've seen that happen is like zero, but why it's happening, I'm not sure. I was really expecting this type of, extreme. I don't even think it's extreme yet. Nothing's really changed to make me think that, that we're going to not go lower. The question is what's going to happen between now and Friday, because I was expecting the market to rally into Thursday or Friday and then start down badly, at the first of the week, because we have all of these similarities with cycle-wise, with Mercury retrograde and the eclipses and stuff, and the full moon coming in early October, much like we had in 1987. However, the Bradley model is telling it's a different story, and I think I have to. It's been, it hasn't been the best, but it's not been the worst. But we're coming down into a low here on the eclipse and stuff on the 8th. You'll see it when I post it in here for you. You'll be able to take a look at it. But just a second here. I'm having technical issues again, which is nothing new for me. That happens every 15 or 20 minutes, so we'll see. But anyway, you'll take a look here at the Dow Jones, and you'll notice that we are coming down into the 8th, which is the Bradley date. That's the date that we have the full moon and lunar eclipse. So I'm expecting the market to probably bottom in there. We might have some pretty good weakness into the first of the week, but I don't think we're going to see a meltdown until towards the middle of October, around the 26th, 27th. That's when the Bradley model turns down strong and goes down into December. Now, I'm not able to pull that up today, but I'm going to try to get it for us by tomorrow. But if you looked at the Bradley model from 1987, you would see the same type of scenario where the Bradley model was calling for a very, very steep move down into October of 1987, which in fact it did. Now, whether that's going to happen or not, I don't know. We've got a little bit of bearishness here, but not very much. But frankly, if you would have told me that the Dow would be down 180 points and the VIX index had sold off 8% from the high of the day, I would say I find that hard to believe. That's basically saying there's pretty much not any fear at all in the market, So that's the bottom line of what we're looking at here with the Bradley model, and I just wanted to bring that to your attention. So far, all we've done is we've made just about a 50% retracement in the Dow Jones. From the fact is, we're very close to it right now. Fact is, today's low was exactly a 50% retracement off of the low from August the 4th. So that's going to be an important possible key place to watch. Now, the one that I wanted to talk to you about here, there's two of them that look very, very interesting today. Well, they all look interesting, but there are a couple of them that look really interesting. And I will show you the first one here, because we've been talking about this now for several weeks, and that is this is the New York Stock Exchange Index, and it shows the divergence that we've had here. And I wanted to show you the low, the retracement that we're looking at from the August low. We're already on the New York Stock Exchange. Just give me 1 second, folks. Yeah, on the New York Stock Exchange Index, we have already gone below the 786, which tells us pretty much the trend is starting to to go down, and we will keep a close eye on that. But this thing with the VIX really has me perplexed, because when someone emailed me and asked me why it was happening, I wasn't even paying any attention to it, because I was watching the bonds, and then also watching the euro and stuff, because I think we're pretty close on some of these things to making some type of a reversal move. But that's really surprising for me to see that the market can do that with the stock market going down and the VIX going down. That usually they're the opposite. The correlation on that is extremely high, in the 90% category. So it's interesting why that is in fact occurring. Now there's another one that's happening right now as we speak. We've been waiting for this one for quite some time, and whether it's going to work or not, I don't know, but it's certainly the old flight to quality story that we've been watching. But we're going to look at December bonds here, folks. We are right at the fact is, we just upticked one tick higher than the 786 retracement. The number comes in at 139.14 here. We just traded at 139.15. We're well up a 1.5 on the day, which is a huge move in the bonds. So this is a real critical level where we are now. Now, if these bonds keep going up, that usually means that the stocks are probably going to go down as people start a flight to quality here. So this is a very, very critical level that we're looking at here in the Treasury bonds. So we want to keep an eye on that today for sure, because at this level they should run into some pretty stiff resistance because of that 786 level that we've been waiting for. I thought it could get somewhere between this level and potentially even the 140 level, but we'll have to we'll wait and see if this is going to happen. One of the questions that someone emailed me and asked me to talk about is the relationship that I'm seeing with the stock market compared to 1987, and the comparison is basically this. On August the 16th of 1987, Mercury went retrograde. That was a Friday. The Dow was down 103 points. The next Monday morning, of course, we were down, quite a bit, more than 500 points in the Dow, and that was a 16% move in one day, as I recall. And now we're coming in to Mercury going retrograde on Friday, October 3rd. And also during that time in 1987, we had a lunar eclipse and a full moon occurring right near that time. That happens on October the 8th. So we've got a lot of, volatility, coming in at this level, to see where we are, at this particular point. So this is basically what we're looking at right here. The only thing that was perplexing to me was the fact that we had such a move in this VIX index where it just didn't do what it usually does, which is quite amazing from my perspective of looking at this particular move. Now we wanted to. I'm not able to pull that up. Hold on one second here, folks. I've got to be able to get this other chart up that I want to be able to show you, and that is you'll be able to see the interest rate play that's going on with the flight to quality, because the utility index just made a Gartley pattern that we talked about on Monday's show. We did complete that last week. It was an absolute perfect one, coming in exactly at the 61% retracement, and now the index is actually rallying, and we're taking out last week's high in the utility index, which is actually a bullish sign here from that point. We still have to get above 570 in the utility index, for it to turn around. So that's the bottom line of what we're looking at here. And I just wanted to let you know that the Gartley that we had in that utility index is still in play. Now, if the market turns around, this is going to look very, very bullish, for the utilities. The fact that it made that Gartley buy pattern last Friday and has actually held up all during that time. Now we have the transportation index here, and I wanted to show you that because this is the pattern that was known as the someone coined it as the jaws of death, which is it's nothing more than the pattern for the 5-point reverse wave pattern that H.M. Gartley highlighted in his book on page 217, I believe. It was known as the T6 pattern. Someone picked it up and called it the jaws of death pattern. What the transportations are doing right now is they are trading almost exactly at a 61% retracement of the low that we made from August the 4th. So we're really over some really key spots here in the market, folks. This is going to be very, very interesting if we can hold this level today. If we get the Dow down more than 250, then it looks like we're getting ready to move. We're going to see a move of somewhere between 500 and 700 points in the Dow very, very shortly. Probably a lot more than that, but my minimum would be 500 to 700 points is what I would be be watching it for. So keep an eye that's what we're watching right now with the Dow Jones transportations. That pattern, that 3 drive to a top pattern, that reverse point wave, that is completed. And whether that's going to be it or not, we'll have to wait and see. I just cannot get over the relationship of the VIX with the rest of these things today, because it is just truly amazing to me that the VIX could actually go down at the same time as when stocks was going down. I wish Basil was on today. I know Steve covers it occasionally, but no one is better at looking at the VIX index than Basil Chapman here at TFNN, and I really wanted to hear what he had to say, but in fact we didn't get to hear him today. We got our first caller in. It's from Martinez, California. Brent, are you there?
I am, Larry. How are you today?
Oh, the problem is I don't hear Brent. See, now that's a problem. I'm having a technical issue here, and what it is, I don't know, but for some reason, I am not hearing Brent. I have to tell him that. Well, I just don't know what to do. Oh, dear. I don't know what to do now. Let me see if I can try something else. Shucks. I wish someone would type in what he was asking me, but unfortunately I'm unable to something is wrong with my mic. It started before the show started. I rebooted, and I don't know what the problem is. I'm just the worst person with computers. I can't go one day without something going wrong with the computers. I mean, it's just one day after another. I don't know why it happens this way, but in fact, there's nothing else I can really do about it. So that's the bottom line of what we're looking at right here. So I apologize to Brent. I appreciate that he called in, but unfortunately, I'm not able to hear him. I didn't hear any of the music on TFNN, so we'll have to see what's wrong here with this, but there's nothing else I can do about that. So we'll move on, to the next chart that I wanted to talk about. And I want to talk a little bit. We're going to have a break coming up here. Oh, we already have. Oh, boy. This
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Think or Swim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And I think everything's working okay now. I'm even hearing music from TFNN, which is good. That usually tells me that everything is okay. Now, I've posted the chart for the XAU, which is the dollar index. It's the gold-silver index chart, and we have completed a huge ABCD on the long-term daily chart on that, as you can see. The problem is that we're so much lower than we were below our 786, which is not a very good sign. Now, we've been watching for the price of gold to get down to one of the really key levels that we've been waiting for quite some time, and we're not very far away from that in the gold market. But I believe that I don't know what would be the reasoning behind this, but I believe that this U.S. dollar has moved so rapidly. You know, we're in the record. We continue the record every day. There is some resistance where we hit today at 86.20, 86.25, I believe, somewhere in that ballpark. But the euro is still just a little bit away from its 786 retracement down at the 125 level. We got down to 125.80 today. We've had a little bit of a rally, but not much to really count with anything. So we're completing some big patterns here in the dollar index. We've gone above the 786. I was looking for it to get to around the 85.50 level, and we've got to the 85.28 level. So that's one of the things that I think is important with some of these markets, that what we're looking at, because this is all money moving, and it's very, very important. Because if the dollar gets stronger, that just continues that the commodity prices are going to get weaker, because that means people are going to have to pay more to buy commodities, and that reduces the demand, and that's hard to do when you've got monster supplies coming in here in just about everything. And it's not just the grains that have gotten hit, or silver or gold. Crude oil's held up relatively well. Gasoline prices are, record lows now in parts of the world, parts of our economy here in the United States. And the price of heating oil has also dropped off. And this should be the time when heating oil should really start to increase in price, because of the seasonalities that we have with the cold weather coming in, to the East Coast and into Canada and stuff like that. So we should have, harder winters usually mean for higher prices in heating oil, but that's not always the case. We had a record year last year, and the heating oil didn't quite do as well as some people had been forecasting. So I wanted to mention that about the gold. The price that we're still looking for in gold still comes in around the area of the, give me 1 second and I'll put it up here so we can take a look at it. Comes in around the $1,200 per ounce level. We're trading at the 1217, but I believe we're going to get one more little push down here in the gold to take us down to this larger ABCD. We're just about there. It needs to get almost to $1,200 a share, which is only $17 from where we are. And that would tell us that we're right at the point. The silver has broken below the 786. That came in at $17.46. And as we pointed out on last week's commodity show, it was going down so fast that it basically had no chance to stop at exactly $17.46. And of course, it went through there very, very quickly all the way down to $16.88. Per ounce, and it's only rallied a very, very small amount from there. So it's telling us that both gold and silver are still, looking quite bearish. In fact, there's not the only commodity that looks bullish from a charting point of view that I can see is live cattle. December cattle have been very, very strong, and so that's the only one that's really way up in the air here. As far as, showing any type of strength. Everything else is deflationary, all across the board, which is not what the Federal Reserve wants to see, but that doesn't mean they're going to get what they want, that's for sure. I really believe that the part of the key today here is what we're seeing here in this stock market and also the bond market, because the bond market is a big market, and it's the one that just making the 786 retracement. And I'm going to be taking a break here pretty soon, I believe. But when we come back, what I want to do is I want to show you the relationship that we're looking at between the notes and the bonds, because this told us that this market was, in real serious trouble a long time ago, and now we should be able to watch it to see if the notes are finally starting to catch up with the bonds, because the note market is far, far bigger. So we got the Dow down on the day, still about 160, and bonds have just made a 786 retracement.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted into Tiger TV the chart of the Treasury notes, and as you can see, they're also having a really strong rally, i.e. Yields backing off a little bit, so we are at a real critical level here in both notes and bonds, in my opinion, and whether that's going to be the top or not, we'll have to wait and see. The market's down a little bit. I mean, it's only down 180 or so in stocks, so it's not really a flight to quality. I don't believe you'll see a flight to quality until you get the Dow down more than 250 a minimum, and I really believe that we'll see moves of 500 and 700 points in the Dow when they finally roll this over. So it'll take a little bit of time before that happens, but we're really very, very close, in my opinion, for that to occur. It will be in October because that's what the Bradley says, and we've had this divergence in the stock market with that New York Stock Exchange Index. And folks, let me tell you, that is the key thing to look at, because that just doesn't happen. I mean, it really just does not happen. It's just something that you just very, very seldom see. Now, I've had a request to take a look at a commodity, which is right up my alley. It's called natural gas. Anyway, what I want to do is I wanted to show you this pattern because we'll do an hourly chart on this because it has a multiple patterns up here, which is real interesting because we have a pattern where we have a big butterfly forming up here at the 419 per cubic feet area. And I think it's per cubic, yeah, it is per cubic feet. And we had a 3 drive pattern occurring at the same time. The market's backed off about $600 from that level, but it's still, in the ballpark of what we were looking for. So this is very interesting here in their natural gas contract. And we looked at that last week when it was down around the 380 level, and it had a huge move, folks. That's about a $3,000 move in the natural gas, so it's a big move for natural gas over a period of 3 weeks. That's equivalent to 60 S&P points. So you can see the volatility here is much greater than you might expect. One other question someone asked me about the gold, if we've had any inklings from the open interest or volumes to tell us whether anything is happening there. And folks, there is not. The open interest just doesn't budge very much at all. It stays right about the same. So there's nobody making any big play either for the long or short. I mean, it doesn't appear that way. They're not shorts leaving the market, and they're not longs leaving the market. It's just staying the same. So it looks like it's just more of the same, and that seems to be, to the downside. But we are getting close in gold. We're only $17 away, around $17 to $20 away from a target that we've been waiting for quite some time. So let's just be patient in the gold and silver. If we miss the first part of the move, that's okay. It'll give us one really good Gartley pattern somewhere along the way up, and that would be really good. I did get an email from one of our listeners in New Hampshire today, early this morning, that asked me to take a look at the stock of Facebook that is jointly owned by the NSA and the CIA and the FBI, and then you wonder why I don't have any. I've never done a tweet. I've never had a Facebook. I've never had anything like that ever. So, but I did want to talk about this because we looked at that just the other day. On Monday when it was filming, we have that same, this is the same jaws of death pattern, folks. Let me put this up here and you'll take a look at it here. This is the price of Facebook, and as you can see, it has this big expanding triangle. It's now down 5% from its high, and that pretty much tells you that the top for that market is probably in, at least temporarily, if nothing else, because we're already retraced 50% of the low we made just 2 weeks ago in just a matter of 1 day. So that's not a very healthy sign, also. But if you take a look at that pattern, that really is very, very important. Okay, we got a caller from Sarasota, Florida. John, are you there?
I am.
What can I do for you, my friend?
Yeah, I'd like you to take a look at a stock I'm interested in, EAD.
EAD?
EAD as in dog.
I hope it's not a dog.
Well, it's an interesting stock.
What is it? What is it? What is it? Is it a dividend-paying stock, or what is it?
Yes, it is.
Oh, okay,
exactly.
That ought to be good. Then it should be acting well today. Then, if nothing else, we'll take a look at it here. It's going to take me a second.
Very reasonably priced. Wells Fargo affiliation.
Is that a good thing?
Wells Fargo looks pretty strong to me.
Well, this stock has made a major double bottom here. In fact, it has really good action. We took out that double bottom by just a little bit. And as a matter of fact, I was joking about Wells Fargo because I've been a member of them since they opened for business back in 1865. So hold on a second. I wanted to show you this pattern here. Yeah, well, you age really quickly in this business. So we just made a beautiful Gartley in this stock down around $9 a share. Well, actually around $8.90. So it doesn't move a lot, does it?
Seems to be very stable, yeah.
Yeah,
and
it's okay.
I thought a nice place to be during all this turmoil.
Yep. as long as this stock stays above 870, you should be okay, because you just completed a Gartley here down at the 890 level. You've moved up a little bit. You're trading a little above 9 now. So it still looks okay. I don't see anything that would prevent me from, in fact, it's acting better than the market these last few days, which is actually a good sign.
Excellent. What I got? Can you do one more for me?
Is it? We get 2 for the same price today because This is October 1st. It's a big holiday in China, and of course they're fighting to keep their independence from Hong Kong. So we'll see if we can do another one. What would you like to see?
Pfizer.
That's PFG. Yeah, I remember that. I remember old Pfizer. They're back in New Jersey somewhere, as I recall. I used to work for Eli Lilly, and I'd have to go back there and get information on antibiotics, because they were trying to break into Lilly's antibiotic market, and Lilly had a tendency to not want that to happen. Hold on one second now, and I haven't seen this stock in so long that I'll be surprised no matter where it is. Well, it's made some type of a major top. It's under some pressure today. Oh, it just made a big butterfly top, way up around 55 and change. Look, the rest of the market. So hold on, let me pull this one up for you, John, and you'll see this butterfly, because it's flat, spot on, and we're in the midst of this correction. We're coming really close to the 61% retracement on this. That's down around. We're only 30 cents away. So Pfizer should be coming into some really strong support, I would think, right in this area. That's what it would look like to me. Let's see if we can take a look at here. You see the 618 comes in at 51.25, and we're trading at 51.65 today, so we're right in the ballpark where it should hold.
Good, excellent. All right, Larry, I certainly do appreciate everything that you fellows do for us.
Well, I love where you live down there in Sarasota. In fact, the King of the Hill lives over there in Longboat Key. That's one of our favorite stomping grounds.
I used to go to a place on Longboat Key where Ed McMahon used to hang out, and boy, what a wonderful, wonderful place.
It is. It's where the lifestyles of the rich and famous for Florida hang out, I believe. Those that move from Clearwater, those that move from Clearwater down the Longboat Key, that's the big difference. But the big money, of course, we know is up in Clearwater.
Yes.
I hope Tom is not listening.
That's what I've heard anyway.
Hey, listen, thank you for calling in. I certainly appreciate it.
Appreciate your help, Larry.
You bet.
Bye now.
Oh, you bet. Okay, we are still under some pressure in the stock market, and we're going to be able to see what it does here towards the end of the day, and we'll go from there. I had another question regarding Tesla, because we were talking about that stock with the potential island reversal pattern that we were looking at a couple weeks ago. I believe that this market has finally, capitulated that it does want to head down to the target that we were talking about. I would like for you folks to take a look at this if you get a chance, because you'll be able to see the island reversal that we made up here back in early September when the market gapped down big. It was down, well over in just one day. It was down 5%. Then it had a little bit of a rally from there, and now the ABCD leg that we've been looking at on this comes in down about another $16, from where we are. So that's pretty good. Oh, I made a terrible mistake here. I put the wrong symbol in. For Pfizer, I put in PFG. I don't know what PFG must be. What is PFG? I don't even know. Oh, dear. What I'm going to do is I want to correct that error just as soon as I can. Let me do that input. I apologize to John in Sarasota, because I had the wrong symbol in, and I want to get that in here and correct it if I can only find it. There we go. Yeah, Pfizer is PFE. Doggone it. Don't ever give an Italian a job where he has to think. That's the worst thing that could possibly happen. Okay, give me a second here, and we'll have this Pfizer stock put up, and we should be okay. Yeah, the big difference here, this stock is, it's still near the 61% retracement, but it's been in a big downtrend for quite some time. But we're very close to some really serious support here in Pfizer. at the 618 levels. Not too far off. It's only about 20 cents off on Pfizer, but we'll see what happens from here. But it's had lower highs since last February, folks. This has been a much weaker than market stock, and the last rally that we just had came into the exact 786 retracement of the high we made back on the 14th. So, that's really telling you that Pfizer has been in a strong downtrend here, but it's coming into some pretty serious support here at the $29 per share level. We're $29.15 right now, so it's important that we keep an eye on that also. Now, someone asked a question about this VIX index. I want to bring it up again to take a look at it, because I just can't believe that we had and even with the market weakening now, we're still we're well over a point. We're actually over a point off the high in the VIX index, with the rest of the market getting totally hammered. I just don't understand why that's occurring, but as you can see here, when I put this up, we're still $1 a share under on the VIX. Now I wish Basil was here. Could someone call and wake him up? He would really be interesting to hear what he has to say about this, because he follows it so closely and does such a great job at it that I would really like to hear what he's saying, because for the market to go up and match the highs we made on August 4th, which was a big day, and then to sell off with the market going straight down, that's not how this index usually works. That's what's so very, very strange about it, and I don't know how to define strange other than that's what it is. I can't say anything more than that. Someone also asked about the price of Apple. We talked about that before, that it should have some trouble up there at that $100 a share level, because that was equivalent to the old high we had at 703 back about a year and a half ago. That's pretty much what we're looking at. Folks, part of the time that I'm on the air here, I grasp for things to, try to talk to you about, but frankly, the one that you really have to pay attention to is that divergence that we've had in the New York Stock Exchange Index and the rest of the market. That is, we haven't seen that. I mean, and that's coming at a time where all these patterns are completing up here. This is very, very ominous, to say the least. And now we're in October, which is the second worst month historically, for stocks. And we were down in September. September happened to be a down month for stocks because of the sell-off that we had, this week. And so it's going to be interesting to see what happens in October. We are going to see increased volatility without any ifs, ands, or buts, in my opinion, because of the fact that this thing has really had a tremendous move so far on a short-term basis, but we've got a lot longer to go. This is just the second week into this, folks. This is not a big deal. Now, the rest of the market topped on September the 4th. That was one day from where we topped on September the 3rd, 1929. Whether there's a relationship or not, I'm not sure that's going to be happening. I have a question about what's happening in Hong Kong. Sarah and I watch it very, very closely, folks, because we have for relatives and friends. Sarah's son lives there, and we go there quite a bit. It's very, very sad what's going on over there. The young people have basically taken control. They want democracy. Today was a big holiday. In fact, it's a 2-day holiday all across Asia and China. And China has a big ceremony that I'll talk about right after our break. We've got the market making new lows.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we were talking a little bit about Hong Kong, and with the holidays over there these 2 days, there's more and more young people out, and so that's why the crowds are going to get bigger. I don't think we have a potential for Tiananmen Square because Hong Kong is such a big place, for everyone. I mean, everybody goes there that travels through Asia. They always stop in Hong Kong, so it's a really big place with financial markets and shopping and everything. But it's all started with a 16-year-old boy. He's the one that became the political instigator behind all this, and what they want is they want equal voting so that they can basically be autonomous to China. And they are operating under the auspices of China because China is, they own Hong Kong. And so that's the problem that we run into. And they didn't desecrate the flag, but it's Flag Day. over there, and they heckled it, and I don't think that made the Chinese hierarchy very happy either. Now, tomorrow happens to be the Memorial Day for China, which is where they mourn for their ancestors. And so that'll be a lot of people out and doing this. We're hoping that we don't see any violence. Right now, there have been some tear gas to mull the crowds out, but they have basically taken a 6-lane highway. And believe me, the highways in Hong Kong, you talk about being filled. They certainly are. They blocked it off. You can't even get through certain parts of it. So they've shut down the inner parts of the city near Causeway Bay and Admiralty Way. So it's very difficult what's going on there. Hopefully we won't have that in our country. But, 300,000 people when you've got 7.5 million on an island is still quite a bit. Anyway, let's get on to the markets. I wanted to talk to you about the euro here because we are incredibly oversold in the euro. We're very, very close to the market coming down to the 125 level, 125.40 level, which is the 786 retracement of this last move from 2012. And we're going to be watching that very, very closely. But we are as oversold in the euro as we've been in the last 7 years, going back to 6 years, last to 2009, we have not been this oversold. And then after that, the market rallied 25%. So at any time, you could come in and see a big move in the euro where the dollar has finally weakened. But right now, the dollar is trading above that 86 level without any air above it, and it's still looking very, very strong. So there's not really much that you can do about it from this level. So the euro does look like it wants to, make this level down here a little bit lower than where we are. We're trading at 126.10. It looks like we've got a minimum of another 70 to 100 pips lower, and then we would see able to see it. Someone asked a question: are the markets open? No, they're closed in China and Hong Kong tomorrow. It's a big holiday. Just about, I think everybody's off other than the service people. And it is a very large, very big holiday, especially in China, because being Memorial Day, and Hong Kong, they celebrate it also. So there won't be any markets in early October. So we'll see what transpires at that point. Another market that is looking very, very interesting, and that is the crude oil market. I wanted to talk about that because the crude oil has been at the point where we've had a situation where the market has had a huge break yesterday, and then today we had a 50% retracement of that break. And the $64 question is are we going to hold the level of $90 per barrel? Because if we break below $90 a barrel, folks, we're looking at something very, 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 very ominous to the downside. This has got a lot of move to the downside. So live every day in an attitude of gratitude, and may God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.